On Wall Street, when sea bass swallow trout or minnows swallow whales, you can make a lot of money. We're talking about mergers and acquisitions. And for the first time, look at your screen, ever, global M&A volume in 2015 surpassed $5 trillion. 10 deals announced worth more than $50 billion. Healthcare and technology were the leading sectors for marriages, you could call them, each seeing more than $700 billion in activity. The biggest announcement was Pfizer and Allergan hooking up. And of course, this is pending. It's going to be a $160 billion merger. Will the mega merger boom of 2015 continue through the new year? And how do you capitalize on it as an investor? Mesirow Financial has one of the largest M&A banks for middle market companies. Joining me now, the company's investment banking senior advisor, Bill Gottschalk. Bill, it's such a busy year you've just had. Is your head spinning?
I think all of our heads are spinning, Liz. It's been I think we're all in deal fatigue at this point.
Why was it so hot this year, and do you foresee it being at least as hot or at least warm next year?
Liz, the reasons the market was so good this year are several. One, we had a bucolic financing environment, debt financing available on historically attractive rates, an accommodating equity market which reacted positively to many, if not all, the deals which involved equity. And finally, very, very ample private equity funds available for investment. So the financing climate, broadly speaking. Secondly, the tepid economy really has led to a lot of activity. Companies have been starved for growth at the top line, Liz, with the result that they have to do something to drive the earnings line, which is not being driven by sales. So one of the ways to do that, perhaps the easiest and best way, is through an acquisition where you can reap substantial synergies. A contributing factor, and it's a little bit at odds with the tepid economy, is there has been at least moderate enthusiasm among business owners, members of the board, about the stability of the economy and therefore the confidence they bring.
There is a way for investors to capitalize, but you do almost have to have X-ray vision, isn't it? So as you look at exactly how to capitalize as an investor, how do you, sir, spot acquisition targets? Because if you can get in before there's a play made for them, am I right, you can really ride the wave of momentum with a stock.
It's possible, certainly. One hopes for that. The principal factors one would look for, remember, this is a growth-starved environment. So if one can find a company growing, particularly at the top line, that's certainly one big, healthy check mark. A healthy cash flow is another. A third element would be the opportunity for cost efficiencies and reductions. And the fourth, which should never be omitted, is the quality of management.
Yeah, you've got to look at
the quality of management, particularly important as one considers private equity moving in, because by and large they don't have the managerial resources to run a company.
Yeah, well, that's how Buffett plays it. He buys the company and keeps the good management in place. You've got to keep the jockey and the horse. Great to see you, Bill. Happy New Year.
And thank you for having me. Thank you.
Bill Gottschalk is Mesirow Financial's investment banking advisor. It's a busy year for this guy.